Hey everyone, this is Kirk here again at Option Alpha, and it is Tuesday, March 15th. Had a pretty interesting day here in the market. This is why I wanted to do a video update on days like this where things are really moving and shaking, just to kind of get everyone back on the same page of what might happen. So I'm going to go through a lot of things here tonight. The things I want to cover mainly are the Nikkei, obviously, which was a huge a headline this morning, falling more than 10% yesterday and over the night. The other thing is the VIX, and then I wanted to get on to just a couple specific charts that I think everyone will just kind of enjoy here. So I think really the strategy that everyone should have going into this is that we want to wait and see some sort of stabilization, whether it's a good story on the reactors that are obviously continuing to blow up, something about some sort of stabilization from the government over there in Japan, something positive that will keep this market from crashing, really. Because if nothing happens and things continue to get worse, this could really escalate fast. But here's a look at the Nikkei, and here's a 10-year look at the Nikkei, and this is just one of the continuous unadjusted looks that we have. So your chart may be a little bit different than mine. But really, what I want to drive home is that we're on a crucial level here with the Nikkei, and you can see that we've hit these kind of major bottoms here around 9100, and we've bounced off of this a couple times. Now we dipped ourselves below that level back in September here, and then again bounced off of it in November. But now we're right back on that same level. So I think it's really interesting if we see the Nikkei start to head down, the Japanese stocks start to head down. I'd be really watching this 9100 level here as my main indicator, because after that you can see we haven't had the monstrous rebound that we've had in the U.S. equities. So I think that the Japanese stocks are vulnerable if we start to break below this. Now, short term, we had a good little relief bounce midday in the Nikkei. If you saw the chart that we had posted, it was actually down more than 14% on intraday trading, but ended up down only 10%. So I think that bounce may continue just a little bit, but I do think that we're going to start to see a little bit more selling pressure as we head into the latter part of this week and next week. Typically, these things are called the dead cat bounce. It's a pretty much giveaway, and what that means is that anything that falls really hard is going to see some sort of little bounce. But I would just caution everyone that I don't think we're going to see the real strong bounce that everyone thinks we're going to see. If we actually look at the EWJ, which is an interesting chart, this is the iShares Japan Index Fund. And again, this looks more like a U.S. equity chart. It's had a lot more rally here from August to February. But you can see how this thing has just, in 3 short days, has really just completely erased months and months and months of trading. So you can never be too cautious. You can never be too careful in this business. And you should always have some sort of protection, because these things can absolutely kill you. Now, of course, we never saw this coming. No one could ever see it coming. But you can just see how quickly that, as soon as this trend line here broke last week, it was only a matter of time, and things just really escalated. The thing I think is interesting, again, is that you can see, and I'm going to zoom in here real close on the EWJ here, is that it actually opened up a lot further down than where it closed. You can see that even though it's red, meaning it closed lower than yesterday's close, it actually opened up a lot further down, probably right around 930 here, and had a huge day to come back and close almost practically higher than what it did yesterday. So a big reversal in this. The thing we have to watch out for on this is obviously that it's going to come back down and kind of retest these levels. This is only one day, and if you go to the intraday chart of it, you can see that it looks very, very sharp, right? And it's having trouble now getting past this last level that it was at yesterday. So it seems like there's a little intermediate ceiling that's been put in right here. I'll just draw it on the chart here. So even though it rebounded very quickly, it's now having trouble, and you can see it's trading sideways as more so than it's trading higher above this level. So I think there's a big risk that we can continue back down into the 960 area, maybe even 950 or lower, depending on what happens. So I just be really cautious about this bounce. But you know, it might be a good idea if you want to pick up a couple shares. They're pretty cheap at $10 right now. Anything around $9. I think you know, things will obviously calm down here over the next couple months, and we'll start to really see where Japan is going and what needs to be done. And I think then shares will start to stabilize, but it's really just very volatile right now. Okay, the last thing I wanted to, or second to last thing I want to look at here tonight is a look at the VIX. VIX is has been pretty interesting. It broke out, technically speaking, and this is just technically speaking, it broke out back in early or late February, really, and with this breakout here when things started to kind of get a little haywire, I guess in the Middle East, things started to get a little crazy. Since then, it's done a classic breakout and retracement where it breaks out of this trend line, comes back down, sits on the top side of this trend line as a retracement, and then continues higher. You can see that today we even broke out of another mini little double high or trading range, if you want to call it that, right here at about 2250. You can see that broke out of that level. So I think the VIX still has some room to go. If I go back in time and I start to look at all these different breakouts, you can see that when the breakout happens, it seems like there's much, much more room to the upside that we just don't expect right now. So as an option trader, I'm kind of sitting on the sidelines right now because I think that this is going to be a great opportunity to grab some premium, grab some volatility premium, sell options far, far, far from the market. Option premiums have already swelled considerably, but I think that they're going to be a little bit more juicier and a little bit better in just a couple of days. So if you're an option buyer, you want to make sure that if you're buying right now, you understand that you're going to pay a lot for this volatility premium. It's going to be priced into the option. So even if the market doesn't move, or if it does move lower, higher, wherever you want it to go, it's got to make a real big move to counteract all that decay and volatility that we're going to get. As the VIX starts to go down, these premiums and options are just going to go down very, very fast. So if you're an option buyer, you want to make a quick profit, you got to have something happen in a day or two. As an option seller, we want to wait for the VIX to go maybe a little bit higher and then start to, again, sell options against that and take advantage of that huge volatility. Okay, the last thing I want to look at is Netflix. This is a pretty big story today. It was up almost 8% today, which is pretty crazy considering what's happened across the rest of the global equities in general. I think what's interesting about Netflix, and I'll just highlight these two areas, is that both times that Netflix has made a breakout or has gapped higher on considerable volume and considerable move, you can see that both of these times here, where the start of these green boxes are on good volume and on a pretty good gap higher. Now, of course, this gap higher creates this gapping window, which we know is a very strong area of technical support for the stock as it continues. So in both instances, it gapped higher, it continued to move higher, and then it found support on this line before continuing higher. So if we just use what we know about past history of Netflix trading, we can see that this gap higher has found support once again on this gapping window and is now starting to move higher. So it looks like, for all intents and purposes, Netflix will continue higher. I think that at least the 250 area will probably be touched again. I don't know if it'll go past that right now in this initial leg and spurt up, but I think that the 250 area will definitely be touched and rallied against, at least for the short term. So I hope everyone's having at least a good trading week. It is options expiration week, so that is throwing another wrench into the whole system here. But as always, stay calm and we'll keep you updated. If you have any questions or comments, please email me, and happy trading.